Can you share screen, or you're not able to share screen?
Hi Helen. Actually, I'm not able to share my screen. It is showing that host disable participant screen sharing.
Just a second.
Yeah.
Now you can please try it out.
Yes. Now I can.
Pradeep, can you introduce Santosh, please?
Yes. Next, help me welcome the second paper presenter for the day, Mr. Santosh. He is all set to present the paper on corporate governance. Mr. Santosh from Maharashtra with vibrant academics is a CA finalist and pursuing his articleship and has acquired a lots of knowledge on diverse areas of income tax and statutory and also GST. Now the stage is all set to hear your thoughts on corporate governance. Please proceed.
Thank you so much, Pradeep, for this wonderful introduction. And good afternoon, Santan Krishna sir. So I will share my screen. So let me know if it is visible or not.
Please, okay. Yeah, it's visible. Go ahead.
Thank you, sir. So what if I tell you that the secret of HDFC Bank being successful is a term called corporate governance? But wait a minute, what would be your reaction if I tell you that the failure of corporate governance was the biggest reason in Punjab National Bank when it couldn't signal out Nirav Modi siphon off? Strange, isn't it? In a world of so many exciting things, I must be wrong if I say that this contrast has not brought an equal excitement about the topic of corporate governance in my life. In a world of corporate democracy, where the regulation are prescriptive and government agenda is in a such way that there is an equal and opposite regulation for every problem. Mr. Uday Kotak, a chairman of Kotak committee formed under the auspices of SEBI, says that the progress of the term corporate governance from India parlance is evolutionary rather than revolutionary. But friends, let me tell you one story. When I was a child, my grandmother used to tell me that grandson, there are two rules. One is God-made and second one is man-made. You should always follow God-made rules, but you should be ready to oppose a man-made rule and question a man-made rule. So, with this background, I am here to question and at the same time to answer the credibility of the question of corporate governance, whether it is credible or not. Friends, let me ask you a simple question. Do you think that the Satyam scam was an incident or a failure of corporate governance to draw a thin line between non-adherence of regulation and ethics? If your answer is that it was an incident, let me frame the same question with different examples of Tata Mistry failout, Vijay Malla absconding, and Chanda Kocher illegally sanctioning a loan. Definitely, a spirit of getting first in the race has caused a failure to other two later. Hello, namaste, vanakkam. A very good afternoon to one and all. I'm Santosh Joshi from Sikh Santoki Pawan Bhumi, Nanded, Maharashtra, and I'm honored to be presenting in front of you all virtually. Our journey for next 12 minutes shall revolve around a topic which in itself has become a pertinent topic and an equally sensible thing to discuss, that is corporate governance. Our discussion will include a concept, a background, a pre and post liberalization scenario of corporate governance, legal framework, recent cases of failure, and words of conclusion. Friends, as you can see, Mr. Toba Beta says that a good corporate governance is about being prosper and proper. This leads me to bring one example into the picture. I hope you all must be aware about Mahesh Bhupathi. Yes, he is a prominent tennis player. He once said that in his earlier career, he was not worried about hitting the ball on the sideline. If you know the tennis, you will know that if the ball hits on a sideline, the umpire comes into the picture, and it is on umpire whether to give that call, whether to give it a credible or not. But Mahesh Bhupti after said that in his later past of the career, he was very reluctant to hit that ball on the line, and he believed that hitting the ball inside the line is very good thing. I would like to correlate with this sentence and with the companies as well. So the Toba Beta says that if you are trying to be proper, your company will automatically prosper. So let's have a look at what does a concept say. As you can see, a corporate governance refers to the set of policies that are created for directing a company on the tenets of accountability, transparency, and ethical practices. So friends, as you can see, there are three things: accountability, transparency, and ethical practices. But the lawmaker has brought and conjunction and between the sentence, but I would like to correlate these things. That if your corporate has been made accountable for everything, it in itself become an ethical practice which will automatically bring transparency into the system. So let's now understand the background of the emergence of term corporate governance. The Cadbury Committee, formed in May 1991, was set up specifically to look at the issues of corporate failures and apparent inabilities of the annual report and financial of the company that failed to state the original and true face of the businesses. And thus, the committee was filled up with accountants. But you will not believe that the committee, which was chaired by Albert Cadbury, he was not an accountant. Yes, it was an irony. But the committee has provided a valuable recommendations which they expected to work as an inspiration, but not the only way, not the only bacon light. So we Indians always follow the global sidelines, right? So in response, in 1999, Securities and Exchange Board of India set up Kumar Mangalam Birla Committee with an objective of raising the standards of corporate governance in India. So the purpose was to bring from and to look from the perspective of investors. So what Kumar Mangalam Birla Committee said, that the shareholders are the owners of the company, they provide their capital for the company. However, they are large in number, so they cannot manage the company. So they choose and appoint board of directors for the management of the company, and it is the responsibility of the board to look and to have a proper corporate governance. Kumar Mangalam Birla Committee divided the recommendation in two types. First one is a mandatory recommendation, and second one is a non-mandatory recommendation. So mandatory recommendations were applicable for the listed entities whose paid up capital was more than 3 crore at that time of 1991. A composition. So what are the mandatory recommendations? I will give some pertinent examples. So first one was a composition of board of directors, that there should be executive as well as non-executive director. There should be at least 3 independent directors. Yes, a debatable issue which I will cover separately going further. And a remuneration committee should be there. And many more recommendations were there. And non-mandatory recommendations were general in nature, being included a role of shareholders, shareholder right of receiving the financial information on a semi-annual basis, sale of whole or substantial part of undertaking, corporate restructuring, and a further issue of capital. Friends, let's now understand what was a pre-liberalization and post-liberalization scenario when it comes to corporate governance. As you all are aware, in pre-liberalization area, Indian organizations were bound by colonial rules, and there were fancies of British employers. A number of individuals and businesses firms entered into collaboration with joint stock entity, and it was characterized by misuse and abuse of responsibilities, which were leading to various conflicts. But friends, in post-liberalization period, India has been looked as a market by prominent leader at a global stage. Further, Chamber of Indian Industries proposed a minimal code of corporate governance to bring investor, stakeholders, and the one who provides money to the organization on one page to create a public confidence. So I have one example to quote like how ideal corporate governance looks like when it comes to organization. So I have 3 characters in my example. First one is shareholder, second one is board of directors, and third one is a fatty CEO, which is representing a corporate. So as you all are aware that the shareholders are the owners of the company, they provide capital and they provide capital to the corporate. After getting capital, it is the responsibility of the corporate to formulate and to provide strategic direction to the board of directors. In response, board of directors works hard and give a proper and periodic update to the corporate. At the same time, board provides an assurance to the shareholders that the shareholders will not be held accountable for the daily operations of the entity. Shareholder also says that yes, we will not intervene in your activities. And if this circle, when it comes to close the circle, it comes up closest with the transparent corporate governance, which is very rare nowadays. Now let's look at a legal framework of the corporate governance. So as you all are aware that the companies in India have to comply with basically 5 things. First one is a Companies Act 2013, then the SEBI guidelines, Kumar Mangalam Birla Committee report, then accounting standards issued by Institute of Chartered Accountants of India, and the listing agreements with the stock exchange on which the company is planning to get listed. So if you see, the whole legal framework is divided into 5 elements, that is the board of directors, audit committees, disclosures, CEO, CFO certification on internal controls, and annual reports. So let's have a deep look at them. So when it comes to board of directors, companies law, with certain sections has mandated the public companies to have a minimum number of independent directors. It can be at least one half or one third, as the case may be. But friends, the independent directors are appointed only for the sake of regulations. If you see that the independent directors are there only for the purpose of compliance and not for minority interest. Thus, they end up being beneficial to the promoters only, which in itself has become a loophole in a modern organization. Second one is an audit committee where the law has been enacted to make that the listed company should have an audit committee which should have at least 3 directors and two-thirds of them should be independent. Then the public companies are made, there is a mandate that they should disclose all the information on a periodic basis. Further, the COCFO certification of internal control should be there, certifying that the financial statements are fair and the responsibility that they are accepting that the internal controls are there and operating effectively. Then when it comes to annual reports, the annual reports of the listed entities are there and they should have a special mention that they are complying with the corporate governance. So friends, till now, we must have understood that the corporate governance is mainly revolves around the creation of a fair environment for creating a public confidence. However, let me make this thing very clear that the holy grail of corporate governance is not infallible. In many cases like Island FS, like Kingfisher Airlines, the blame has been given on GST and taxation. However, the root cause of the same was the failure of corporate governance. To correlate with my earlier example, with my earlier tennis analogy, if I say that these companies which are there on your screen tried to hit the ball on that line continuously and they forgot that, but there is an umpire is there. So the umpire has stopped them from doing that, and there comes an inspiration which emerged as a blessing in a disguise for a student to discuss about corporate governance. So let's have a look at those three cases. So first, when it comes to Satyam Computers, a Satyam Computer was a company which was chaired by Ramalingam Raju, and it was a public limited company which was enjoying a good reputation. However, it colluded with auditors, a firm which is a part of Big Four, that is a PwC PricewaterhouseCoopers, to mislead the investors. The issue started when the Satyam made an attempt to invest rupees 7,000 crore in Meta's infrastructure. You must be asking what is issue in that. But when I tell you that the major stake in Meta's infrastructure was held by the members of the family of Ramalingam Raju, oh, then there is an issue definitely. So with these shell companies, what Ramalingam Raju did, that is overstated his assets and understated his liability, which caused a window dressing in its financial statement, right? But so these investments were approved by board of directors because they were under pressure, but they invested into the same, and it caused the scandal to be unraveled when Ramalinga Raju come and confessed about all these things. The second example is of a Nirav Modi scam which happened in case of Punjab National Bank, when the Punjab National Bank issued a fake letter of undertaking worth rupees 11,000 crore to this man, to this Nirav Modi, at its Brandy House branch in Fort, Mumbai. But friends, you must be wondering that how it affects. So we all are chartered accountants and we 9 to 3:30 are there on screen on share market. So if you see the stock of PNB is currently trading at 40.65. But this news in the past has affected the share price in such a way that you will start investing in the share market. When the news has come that there is a fraud, the share market, the share price of Punjab National Bank fall 55% in 5 months. But when the news came that he's getting arrested, it raised 4% in a single day. Then when it comes to Diwan Housing Finance Limited, it was the biggest corporate fraud of 2019, which is still under investigation. The scandal revolved that there has been some disbursement of around 23,000 crores, which was there from a Bandra branch, for which a parallel set of books exist, but it was not there. So, so you can see the share price how it colluded. So what are the words of conclusion then? So we can definitely conclude that the government, rather than working on Newton's third law of motion, which says for every action there is an equal, opposite, and instantaneous reaction. So government comes up like this only. Whenever any problem arises, government comes up with regulation. But so conclusion will be that the ethical practices by the corporate should be backed by robust legal framework. Then the BOD should recognize that good corporate governance is not only about compliance, and avoiding numerous regulations will be and to help people understand what is right and wrong is the most important thing. With this, I would like to conclude my presentation. Thanks for being an excellent audience on the occasion of Gandhi Jayanti. Thank you so much.
The only thing is, before she comes, I thought I should make a few comments on what you have presented.